Carson, you're one of the best known names as a short selling activist, and you're setting up a television channel. Can you give us a little bit about that and about the reasons why you're doing this?
Sure. Well, I've been an activist short seller for over 10 years. And the reason that we're setting up Zer0es TV is because there needs to be a longer form way, more in-depth way of telling these stories about these companies, because there's a lot of complexity that a lot of times you can't get into in quick media sound bites. That's number one. Number two, also want to broaden the understanding of what short sellers do and how we do our work. So we're creating content that's going to be aimed at everybody from complete novices when it comes to short selling and understanding of short selling to people who are sophisticated investors.
And I think you touched on something there, which is that short selling sort of in a lot of people's minds is at the periphery of finance. People call it a dark art, but actually in many ways it's a little bit more mainstream. But for the audience, could you just kind of go into what short selling is and the importance that it does play in the overall financial framework, and maybe give a bit of a flavor, explain what short selling really is?
So when you're selling something short or stock short, you're just selling it before you're buying it. So just like everybody else, you're trying to buy low and sell high, but you're reversing the order of the transaction. And as a short seller, what you do is you borrow somebody else's shares that are sitting at the brokerage firm, you go and you sell them, and then later you repay the loan by buying back the stock. So if you're shorting it, you hope to buy the stock back here, but one of the cruel realities of short selling is that your potential loss is unlimited, so you might have to buy it way up there in order to repay the loan.
It sounds like the dangers there's these dangers inherent in it. I mean, obviously you find this very exciting. What's the attraction in doing something where, as you say, there are potential unlimited losses versus if I went long a stock, I know that my maximum loss is going to zero. How do you kind of get involved in that space when you have to presumably have a different mindset?
To answer that question, you have to look at two different categories of short selling. The first is fundamental driven short selling, and that's the more common version of short selling. So where an investor thinks that a company is a melting ice cube over time and they short it for those reasons. That's not what we do as activist short sellers. We're in this other category where we're looking for frauds, we're looking for promotional managements, or managements that have been, at the very least, deceptive. And we're trying to see through their statements and see through the facade that they present to the public markets. And to me, that is, it's much more interesting than just investing and trying to figure out the future. It's solving a puzzle, but it's also unearthing secrets. So to me, that's the most exciting thing that I could be doing professionally.
How do you discover those? Because I mean, it sounds like there are, you've really got to dig beneath the surface. It's not just a case of, it's a gold stock and there's no gold left. This is more, you've got to find the wrongdoing. How do you go about unearthing that? Because that must take quite a lot of legwork.
Well, a lot of times it starts with things that seem too good to be true. That adage that if it seems too good to be true, it probably is 100% the case in our business. So a lot of times we look at things that seem too good to be true. We look at managements that are constantly making promotional statements or are announcing new initiatives, but then later they never talk about those initiatives again. So a lot of what we really look for is behavioral to begin with. From that point, we look at the accounting and we try to figure out where the issues are. And we also really try to understand the management's incentives and when they're really trying to monetize or cash out on their behavior. And from understanding the accounting, that'll tell us where to look. Are there certain transactions at which we should look, certain relationships with customers that we should look at more closely? So that's usually the path. And I made it sound pretty linear, but it's actually fairly iterative because you look under one stone, you get some more information, and that leads you in another direction, and you repeat the process.
And presumably these are sort of idiosyncratic stories. There really are one-offs, or do you find that there are trends, or is it literally you're searching for that one-off company that's doing something dodgy, and it might be and then you find another one that's completely separate, different geography, different business sector?
Yeah, we're global, we're industry agnostic, because we find bad behavior, it can crop up anywhere. There's certain industries that will lend themselves more because of the type of accounting employed to abuses. So trading houses, we have over time shorted 2 commodities trading houses because there's a lot of latitude into how they value gains and losses. And that's also similar to a litigation funder that we had previously shorted, where they also had a lot of latitude in the accounting standards. So that's something that maybe we do focus on a little bit more, is what businesses can take advantage of gaping holes in accounting standards or latitude in the standards. But outside of that, misleading or outright wrongful behavior can occur in any industry.
And do you find any sort of particular environment where this might be more commonplace? So, for instance, when you talk about the tide raises all boats, do you find in certain environments people get away with a lot more, and therefore you find it's richer pickings? Because also, I guess, in those sorts of environments where there might be more people doing wrongdoing, are also the ones which are the most difficult to navigate, because they're markets that might be going against the trend of a short seller.
These really frothy, strong bull markets, especially when they're prolonged the way this one has been, these really do breed that kind of bad behavior, because there's somewhat of a crowd effect. So when a CEO of a company sees all of these other CEOs who've made tens of millions or hundreds of millions of dollars cashing out of their stock, they think, well, gee, why shouldn't I? Why shouldn't I put the pedal to the metal? And so I feel that since the financial crisis, the level or the standard of corporate governance has just gotten lower and lower. So we've had this really now 12-year race to the bottom in terms of governance. And again, the more a CEO looks around and sees people in every direction who've been really gilding the lily, the more likely they are to say, hey, I'm the fool here if I don't do the same thing. So we are in right now what I think is a largely corroded corporate governance environment. And I would also couple that, obviously, with patterns of enforcement. And without trying to, I don't want to be overtly political about this, but in the United States, Republican administrations tend to dial back the securities enforcement. So often when you get that type of government, or in the UK it could be a conservative government, but when you get a government that's dialing back its enforcement efforts, that also creates more of these problematic companies. Now, from one perspective, you'd think that that'd be great for an activist short seller, but from another perspective, the tide really is going against us. So we have to be very smart about the companies that we think have problems that will matter to long investors.
And do you find there are different sort of types here? Because we often hear of people who, short sellers, activist short sellers, who feels like they invest their whole life, their whole being into one story, and these stories last years. They play out over a very long period of time, almost a whole investing lifetime, versus other ones where it's a hit and run. You nail it and it goes, and you kind of work it out there and then. I mean, are there different types out there, and what is the sort of the variation in the different types of short opportunities from an activist point of view?
I consider it to be a failed activist campaign if several years down the line you feel like you still need to be saying something about the company. Because the cornerstone of short activism is looking backward into the past. So we're not sitting there saying, hey, I've got a better earnings model than the long holders have. We're saying, here's what really happened, and they misled you about that. Here's something that happened that's important that they didn't tell you about, or here's something that happened that the market's aware of, but doesn't really understand what the real meaning is. So we can say all of that in our initial, when we initiate a campaign. I mean, we'll cover several years of history of problems when we initiate a campaign. So between the first and maybe the third reports, we put it all out there. Now, if that doesn't cause investors to re-rate, I don't think that you persuade them by publishing additional information in reaction to a quarterly earnings announcement. I mean, when these activist campaigns are successful, it's because inside the company, they realize that they're being scrutinized and they have to change behavior. So the way I think about it is, if a short activist campaign is successful, it's because we've created such a highly pressurized environment on the company that things inside it start to break. So maybe the CFO resigns, or directors resign, or the auditor pushes back, or they decide that they have to stop being so aggressive in some of their business practices or their accounting, and then it starts to unwind. But if you're there 2 or 3 years later, after having done a full activist campaign on the front end, if you're there 2 or 3 years later, just jumping up and down about the latest development in the quarterly earnings announcement, I don't know. I think at that point you're probably wasting your time. I mean, the stock very well might collapse, but I think then you get a situation like Wirecard in Germany, which people going back to 2008 were questioning its numbers and publicly stating that it might be a fraud, and that thing went all the way up to a 20 billion euro market cap over the next 12 years before it finally collapsed. That's not a situation you want to be in. Everybody's resources are finite, and 2 or 3 years down the line, if nobody cares about the information you put out, I mean, in my view, you should definitely be on to something else long before then.
So, Carson, one of the things really interesting there is that you're finding companies which are in many cases fraudulent, and there's always been this sort of negativity around short selling, but actually it's doing a service, because we don't want people putting their money into these companies that ultimately will always go bust if they're fraudulent. So there's, I mean, maybe we don't want to call it a public service, but there is absolutely a place for short selling in this sort of scenario to try and wheedle out these sorts of companies.
I think it's a little bit of a complex answer to the question that you're asking, is what is the morality of doing what we do? So most of these companies that are egregious abusers of investors, they continue to raise money from the market. So the problems become bigger when that happens. And by getting in there now, we are protecting future investors. Now, let's say we're really successful in our campaign, and let's say the stock is down 70, 80% within a few weeks. Let's say it gets delisted. Well, if you were an investor who lost all that money on the way down, you might say, hey, I don't care if this thing would have gotten bigger, because if it collapsed under its own weight in 2 years, I probably wouldn't have been here. Why is it that I should bear the losses in order to protect future investors? And to me, the answer really, the reason for what we do, is it's not about that individual company that just went down 80%. It's about the next company CEO who's looking at that company and thinking, hey, maybe I'll be like that guy. And then boom, it's saying, maybe you shouldn't be like that guy. So to me, it's about broader market discipline, particularly when you don't have enforcement that's really proactive. I think it's important. Now, let's just be realistic here. 12 years into this bull market, where, as I've said, it's a highly corroded corporate governance environment, can a handful of activist short sellers turn the tide? No, of course not. Because if we had, or if we could, we never would be in such a corroded environment to begin with. But it's a finger on the scales. Maybe it's a little bit more than a finger on the scales. And at some point, you go through a cycle, the politics change, you get more active enforcement, and that also helps things get back into balance a little bit. So we're not going to save the markets from wrongdoing in and of ourselves, but we are somewhat of a counterweight to those forces of corrosion.
Now, the best results, the ones where you find the wrongdoing in a well-regulated market, where they're clearly, when you find it, it's very clearly wrong, rather than in a less well-regulated market where you're almost expected to bend the rules. Is it places like, the US, the UK, Europe, these sorts of markets where when you find it, they're wrongdoing because the regulations have clearly been, contravened?
I think there's actually a lot of nuance in this as well, and maybe I should have also said this in my previous answer, but I think the biggest problem that we have in the markets in terms of how information is presented, it's not the companies that are frauds from a legal perspective. It's these intellectually fraudulent companies where the managements are well advised by attorneys and they can stay just on the right side of the line. And that's what Jim Chanos calls legal fraud. And I completely agree with that terminology. To me, that's the bigger problem, because you're not going to get enforcement cases or even oftentimes investigations into those companies to signal to investors that there's something wrong. And going back to my point about us providing some, as activist short sellers, providing some balance to the market and changing the incentive system a little bit, I think it's most important and most effective when it comes to this legal fraud category. And so we will be very clear when we short a company like that. We'll be very clear that from a legal perspective, it's not a fraud as far as we can tell, but these guys are abusing accounting standards. And here's what they're doing to hide the ball. And it can be just as deleterious to investors as actual fraud is. And to illustrate this, I think it's worth talking for a moment about Enron. It's really funny because when investors think about frauds or big frauds, they think Enron. Enron was this big fraud. Enron was adjudicated to have some fraud in it. But the reality is that Enron collapsed because of its debt on top of abuse of accounting standards. Abuse that was entirely legal and still is legal to this day. I mean, those are the types of companies that we will often target when we're doing legal frauds, is companies that are basically stretching accounting standards to the maximum the same way that Enron did. With Enron, the reason that it became synonymous with fraud is it became very political. It was this huge company in terms of market cap, but it had a lot of debt, and it had these legal but just meaningless profit reports. And when it collapsed, it was such a shock that the DOJ came in, and I think everybody assumed, well, there must have been fraud here. And they sifted through everything, and they found some transactions that were adjudicated to be over the line. I mean, I don't think they were massively over the line. I don't think it was obvious at the time that they were over the line. But the DOJ got convictions and guilty pleas based on those. But Enron was largely not a fraud. So that's the type of company that we usually focus on, is the non-fraudulent Enron type behavior.
And as an overall group of people, the short-selling activists, it sounds like it's a relatively small group. I mean, are you born a short-selling activist? Is it in your DNA, or do you learn it? Is it something that is a passion that builds? Because you must have some certain criteria. I mean, do you get emotionally attached to your positions, and do you get really excited when they go in the right direction? How big is this group of people, and do they have similar characteristics?
It's a small group of people. I don't think that we have a lot of similarities. Some of us are in this profession or are activist short sellers because we choose to be, and we have other alternatives. Others are in it because they really wouldn't have another place in investing, and the money is good. Now, the money's not great. I want to make that clear. The money can be good, but the number of short activists out there also kind of goes through a boom and bust cycle. And what really puts activist short sellers out of the game and keeps the field narrow are the legal expenses. You will get sued by companies. We get sued on average once every 2 years. And because we're global, we've gone into some jurisdictions where the regulators have a significant hometown bias, and they hate American activist hedge fund short sellers. And so we've had to deal with that as well. So it's a very, very tough business to be in. I like to think that the people who are prominent in this and are good at it, it's because it's a passion. I don't know if that's true, but in terms of my personal makeup, yeah, there definitely is something. When I first fell into doing this, I really felt as though I had found myself, because I was somebody from the time I was in second grade all the way through senior year of high school. I had a lot of discipline issues. I had no respect for authority because I felt that a lot of authority figures were actually wrong, and I had no problem voicing it. But that had always led to, I guess, some level of suffering on my part, whether it was getting suspended from school or just dismissed out of hand by my contemporaries. So it was only when I got into activist short selling, and I'm in a much more pragmatic world where people actually care a lot more about who's right and who's wrong because their money is riding on it. It's the total opposite from politics, basically. Politics, I don't think anybody cares who's right and who's wrong. It's really just about, which team am I on, and and I want my team to win and the other team to lose. So once I found this niche where I could actually build a business and make a living off of telling uncomfortable truths, and calling out people who are in positions of power, to me, it just didn't get any better. I really feel like I found myself at that point.
Interesting in some ways that you're talking about, I don't like the word trouble, but sort of that background that you had, which is maybe slightly left field, and the niche that you're now in. But now you're launching this TV channel on short selling and short selling activism to really broaden the spectrum, because you want to get the message out there that maybe this is something that more people can get involved in and more people should get involved in. So maybe if you could just talk about how you want to sort of use this channel to really kind of spread the word, spread the message.
I'm not sure I'm trying to encourage more people to get into activist short selling. Let me be clear there. It's I get asked all the time by people, how do I get into it? And it's a very difficult game in which to succeed. But what I want to do is I want to broaden the understanding of what short sellers do and how we operate. Because a lot of people, especially a lot of retail investors, and I see this on social media, because you've had this huge surge of retail investors entering the market, a lot of them have no idea how we operate, and you can tell that they're so dismissive of a lot of what short sellers or activist short sellers are saying, and I think that's because they just genuinely don't understand. So and look, I think this goes very badly for individual investors who are so dismissive. Maybe not in all companies, but certainly in some. So to give a better appreciation for how we work, what kind of information we look at, and how we do our analysis, and why we do it, I think would benefit at the new the new to investing individual, would benefit that tier of investor. But even at a much higher tier, I also want to communicate with and share knowledge with money managers who are running pools of long capital, or even doing equity long short. Because a lot of the vast majority of equity long short managers think far more about the long side, and the short side is somewhat of an afterthought. So we also want to create content for them that's actionable, but also helps them understand our processes as well, because it's not the mirror image of long side investing. That's not what short selling is. And you have to look at things from a very different perspective. And that's something that the vast majority of investors are not capable, I think, of being good long side investors and being good short side investors. I really think that in terms of mentality, you're either one or you're the other.
To get these messages across, you're going to be doing some interviews with some of the other legends in the space, some in-depth ones about how they've got into the business and also how they think, that mentality, and how they come up with their ideas in a long form format.
Yeah, exactly. And look, I'm expecting to learn a decent bit as well. I've had obviously conversations with my peers over the years, but I haven't had an opportunity to sit down with most of them and really go in depth and compare how they think about shorting and how they approach it to my own approach. So that's also really exciting to me.
Lots of learning coming through it, because you're also going to be looking at, or people are going to be discussing that aha moment, that trigger where they spotted something which they could act on. You're also going to do education as well. So it's going to be a lot more than just discussions about short selling. It's actually going to be how to get involved, how to understand it. And you're going to be having this educational material as well. Is that right?
Absolutely. We're going to be offering content that's kind of a short selling 101 type of content, but it's actually not really that basic. It'll talk about things like how to manage risk and manage position sizing. Then we're also going to be doing retrospectives on interesting or notable shorts. And we're going to be talking to some of the people who are the key players in unearthing what was going on there. We are also going to be doing a monthly news show where we talk about the world of, as I put it, shitco's and what's new and interesting. And we want to bat back and forth both sides as well, not just the perspective of the short seller, but where the company is coming from and is there merit to what they're saying. So those are some of the things that we're doing. We're also going to be covering what you just brought up, short triggers. What are the things that we, or the people with whom we're speaking, what are the things that when they see it makes them think, aha, this is a company I should look at more closely.
And then maybe the icing on the cake is you're also going to announce some of the more exciting research that you have as and when you feel it's appropriate. So you're going to be looking at some of your best ideas as and when they become live. Is that right?
Yes. For Muddy Waters, Zer0es TV will be the home of our new campaigns. This is where we will announce our new campaigns and discuss our short theses in depth. And we're also going to have other short activists exclusively announce their short ideas as well on Zer0es TV.
That's pretty good, because it's kind of a revolutionary model in some ways, in that you're using video, which is obviously exploding now, and social media, to launch your research views and really get it out there to pretty much anybody who wants to sign up.
Well, you don't even have to sign up, but you can see those announcements by coming to the channel, and those announcements will be the broadcast ahead of time to say Carson Block is going to be on Zer0es TV, or so and so is going to be on Zer0es TV tomorrow at such and such time with a new idea. So you can come in and get actionable ideas, but when you're not looking at the actionable ideas on the channel, you can go through the library of content and improve your framework understanding of what we do, whether it's to make you a better long side investor, a better risk manager on the long side, or if you actually are a short seller or interested in short selling, to help up your game there as well.
And look back at your career. Maybe we can just talk about one or two of those bombshells of your past that, if it was in the future, would make it into this program, where you found something and it's worked and you just felt, yeah, that was it. Are there any sort of, a couple of names that really stand out from that career of yours that would have made it in if they were in the future?
Sure. The one for which we're most commonly known was a short 9 years ago of a company called Sinoforce. So we started this business focusing on US and Canadian listed companies from China. So Sinoforce was purportedly anyway, a large forestry company in China. And it was public in Toronto. It had been public for 16 years. I think the market cap was about 5 or 6 billion when we published on it, and it had another 3 billion in debt. So this was a company that, it was a major cancer on the capital markets, is how I put it at the time, because it was just soaking up money. And these offerings were underwritten by the top investment banks, and it had some of the biggest name investors in the world as its top shareholders. But the reality is, it was almost entirely a lie. And we did this research. We rented an office in Hong Kong. I expanded my team for the purpose of this, and we were shuttling people to the mainland, a couple times a week to get files to do work. And over the course of 2.5 months, we got to the point where we felt we could bring an overwhelming case public that this company that was very institutional, that was very widely held, was actually a complete fraud.
And when that happens, when you nailed them like that, is it sort of a feeling of satisfaction that you've basically nailed a company that's been doing something wrong, or is this, and then when it's happened, it's all done and dusted, do you sort of feel a sense of loss that all that work is now kind of done, or is it easy to move on to another big story? Because presumably you've had quite a few. I mean, roughly how many do you have per year?
We're doing maybe 5 to 6 campaigns per year. Yeah, I mean the thing that's interesting is it's that emotional cycle you go through. So during the research phase, it's really exciting every time you turn over a stone and you find something that's damning. And as you progress through the research process, you get a lot more efficient because you're starting out by going in lots of directions, but then you begin narrowing your focus and going really deep into certain areas. So during that process of discovery and interpretation and connecting dots, it's a lot of fun. But then when you get ready to publish it, then there's a lot of pressure because anything that you get wrong, the company is going to try to exploit in order to discredit you. They might try to sue you over it. They might get the regulator to bear its fangs at us. So there's a lot of pressure then to deliver this product that's tight and deliver it on time because we're trading into the name, we're getting our position on. The other pressure there is, are we telling the story in a way that's going to resonate? There's a lot of communication skill that goes into this, particularly because investors are constantly deluged with information. And so, can you concisely get an investor's attention and explain to them what the issue with the company is and why it should matter? So, a lot of times when you see short activist campaigns that don't succeed, it's not because the thesis was wrong. It's because the short activists didn't present this in a way that people can digest, especially because so much of this is complicated, particularly when we get into accounting standards and how they're being applied and how they're being abused. When you start getting into complex accounting or shell games that companies play with different entities and transactions, that's really heady stuff for your average investor, even professional investor, to understand. And the other issue that you have when you're trying to communicate it is that you've been ensconced in this world for so long that as you start to write this out, it makes complete sense to you, but you don't have the perspective of somebody who hasn't been working on this for months. Oftentimes, it takes us months to bring something from inception to completion. Because we lack that perspective, that's also a challenge. So there's a lot of pressure as you start putting together the documents and getting ready to tell the story. Then you go public, and then you know that it's going to be a fight. It usually is a fight, and it often gets quite nasty. So the fight part is, at first, it's never really that pleasant. And now that I've been doing this 10 years, I watch the same movie over and over. So a cacophony of defenders from the sell side, writing their responses to a blog post. They won't actually mention Muddy Waters. Usually, they won't give it the credit of being a report. It's so they're trying to slight us, and they're yelling back at us that basically what the company wants them to say. So you've got to deal with all that and get investors, again, focused on the key issues. And so there's this fight, and sometimes it becomes really personal. Now, when a company makes it personal, that's actually when it becomes fun. Again, so there's some companies, and I think it's absolutely the dumbest thing you can do as a management. But if you want to come back and say, oh, Carson Block is a short seller, and he's not a nice guy, and he's friends with Stormy Daniels. One CEO actually said that on CNBC. Now it becomes fun again, actually, because now you're just pissing me off. So I think for a lot of activist short sellers, like once it becomes personal and we're just really trading blows, I think that's when we start to enjoy it. But that initial period when you put it out and you're really looking at the market, trying to understand what the market is getting about your report and not getting about it, and you're taking all the arrows from all the investors who are pissed off at you. Yeah, that's probably the least fun part of the whole process.
With all of that, Carson, there's the energy there, there's the excitement, there's the thrill. When the regulator there, maybe it gets less exciting. All that information, all that knowledge, all that experience. I mean, basically, this is all going to get packaged up onto Zer0es TV, and this is what people can see from the basics, the complexity, the energy. That's all going to be on display on this channel.
That's exactly correct. And if I could put it in one phrase for most investors, it's learning how to better protect yourself against financial predators.
Carson, thank you very much. This should be a very, very exciting channel.
All right, thank you.